Hey traders, and welcome back to our new video. A lot of traders use indicators alone to trade into the market. Now here is where they make a mistake. The indicators might help you once or twice, but they won't help you in the long run. Since indicators are based on the past price action, they cannot be trusted fully. The market does not repeat its action each and every time. And also, through price action, we can buy the stock at the right time, which would help us in earning nice profits from the market. But if we use the indicators, then we will have to wait for the indicators to give out a signal, which will lead to a delay in taking entry into the market. And hence, we recommend using the price action instead of the indicators. And this is what's the topic of this video. So, in this video, we will explain the price action concept in deep, and after that, we will reveal an advanced strategy of the price action, so make sure to stay around the end. Now, before we move on into the video, if you are interested in the topics like this, then subscribe to our channel and don't forget to hit this bell icon so that you don't miss out any of our upcoming videos. First, to begin with, let us first understand that why we should use the price action and not other tools. A large number of traders are drawn to complex analysis, which makes it challenging for them to make money from the market. And that's why we recommend using simple techniques. As the simpler the techniques are, the easier it would become for you to earn money out of it. Now, let us learn about the basics of the price action. Firstly, what is price action? So, basically the price action is the change in price of a security over time. In simple words, the price action trading is about reading what the market is currently doing. After doing so, the traders can use the trading strategy accordingly, which would help them generate good profits from the market. The price action also helps in trend identification and in spotting out reversals too. The price action trading helps in knowing the behavior of market participants. Like, if the market has made a big red candle with a smaller upper wick, then we can say that the strength of sellers is very high, and if it continues to make candles like this, then we can conclude that a lot of sellers are entering into the market, and hence, they have gained control of the market. Likewise, if the market is making a big green candle with a smaller lower wick, it indicates that the buyer's strength is increasing, and if the market continues making candles like this, then it indicates that the buyers have gained control over the market. And similarly, there are small candles like the dojicandles and the bullish as well as bearish hammercandles, which are often seen into the chart of the market. The dojicandles indicates that there are an equal number of buyers and sellers. Therefore, it is said to be an indecisive candle. And similarly, there are hammercandles. The bullish hammer candle has a bigger lower wick and a smaller upper wick. This indicates that the sellers tried a lot to push the market to the downside, but the buyers then took control and pushed the price to upside. And likewise, the bearish hammer candle has a bigger upper wick and a smaller lower wick. It indicates that the buyers first brought the price to upside, but they were not able to hold the price at that point due to more number of sellers. And therefore the price closed below this opening price. These hammer candles are useful when it is formed during the major structure levels. These hammer candles are usually formed during the end of an ongoing trend. The traders use the price action components, which helps them in making a correct decision. The price action components helps the traders with reading the charts of the market. In short, through price action components, the traders can determine the upcoming price movement, and accordingly, they will go long or short into the market. Let us see an example of it. So here we have a chart of the market where the price is making higher highs and higher lows. This suggests of market being in an uptrend, and as it is in an uptrend, we will find the areas from which we can go long. We rejected this support zone twice previously, and now the price is coming back to it. By seeing these two upward movements before, there will be a lot of buyers resting at this support zone. The market has finally reached at the support zone. Now, here is where the price action would help us. After reaching at this zone, the price is making these rejection candles. These rejection candles indicate that the sellers are trying to push the price downwards, but they are unable to do so, as the buyers have gained control of the market. But we cannot go long just by seeing these rejection candles. That's because these rejection candles are sometimes indecisive. This rejection candles, when the market is in a downtrend, indicates that the sellers are doing the profit book. These candles act as a pause in the downtrend, and that's the reason why you shouldn't trust these candles completely. So here we will wait for the market to make some more candles, which will help us in figuring out the direction in which we should take the trade. The market has made some bullish candles. This indicates that the buyers have gained control over the market, and now is the point when we will go long. While initiating the buy order in a situation like this, you must ensure to keep the stop loss of your trade below the support zone. This is important as sometimes the market comes at this level again for retest, and in which a lot of buyers are removed due to their stop loss hunt. So, if you don't want to be stepped out, then keep in mind to place your stop loss below the key levels, which is this support zone in the current scenario. This small candle in this example removed a lot of early buyers from the market. After that, the market made a nice bullish move. This stop loss hunting is done by big institutions and banks. Have you ever wondered why they remove the retail and small institutions from the market? What's the benefit of doing so? Let's understand this through an example. Here we have the chart of the market. The price is seen making higher highs and higher lows. The price is seen respecting this resistance zone multiple times, which indicates that a lot of sell orders are being rested here. The price has tried multiple times to break this level, but it didn't happen. And now the market has again came at this zone. Let's wait and see how the price reacts to this resistance zone. The price went above this resistance zone, which we usually call as a breakout. The market has made a strong bullish move, which is why this can be said as real breakout. By seeing these bullish break, a lot of breakout traders will go long from this level, but we would not do so. And instead of that, we would wait for the market to make a pullback till this resistance zone or above it. The price has started coming down, and it has finally reached at this resistance zone. A lot of people get confused behind this move of the market. Because if the buyers are strong enough to break this resistance zone, then why did the price come back to this level? This is where smart money enters. Let's say that the smart money wants to buy 500,000 quantities of a currency pair. For fulfilling such a big order, they would need sellers who could sell these shares to them. As the market runs on the forces of demand and supply, the sellers are essential for completing such a big buy order. Now here is the trick that they apply. The smart money makes the retail traders and small institutions believe that this is a real breakout and hence a good point to enter. And when they do so, the smart money brings the price below the 50% of this resistance zone, where the stop loss of a lot of traders are rested. When the stop loss gets hit, the buyers become sellers, and thus, the smart money can fulfill their orders easily. The price will not always make a retest like it made in this example. Generally, the price does so when this level is tested multiple times. While taking entry into the market in the situation like this, you must ensure that you keep your stop loss below the major structure levels, which is this resistance zone in this case. Now that we have learned about the basics of the price action, let's move out to the strategy of the price action. Let's learn this through an example. So here we have a chart of the market where the price is making higher highs and higher lows. In this strategy, we would first analyze the chart on the higher time frame, and then we would switch over to the lower time frame for confirmation and entry. The price broke this consolidation phase to the upside, and now it is currently making new highs. Now if we zoom out a little bit, we can clearly see that the price tested this level multiple times, but it failed to go above this level. But this time, due to high buying pressure, it broke this level to upside. We will wait for a pullback to happen for taking entry into the market. The price has started coming back to this level. The price made a bigger wick candle at this zone, which removed the early buyers. Now we will switch over for the bullish confirmation, and then, if it gives out a proper bullish confirmation, then we will go long from that point. The market has started to make some bullish candles. Now here is where we will take our buy trade. The stop loss, as we discussed previously, should be kept below this key level, and the target for the same is placed at 3 times the stop loss. Let's wait and see what happens next. The market went above, giving us good profits from our trade. This brings us to the end of this video. So in this video, we revealed a highly effective price action strategy that will help you out in making good profits from the market. But we prefer you to backtest this strategy before using it out on your real charts. If you found out this video informative, then like the video and be sure to subscribe the channel, along with clicking this bell icon so that you get notified every time we post a new video.